Hey traders, welcome back to our channel. I'm Kenya with BK Trading Academy, and in today's training, we are going to talk about NZDUSD. I'm going to give you an analysis and also go through some charting in hopes to help you with your approach. Hopefully you can learn something new from it. I'll also show you what to be cautious of right now and what we're dealing with in terms of price action, and hopefully help you to find a profitable opportunity. I just want you guys to know that there are people online who impersonate us and are sending messages to some of our followers on different platforms. Please know that we will never direct message you at any time. So if you ever get a message pretending to be Brian or Kenya Horton or BK Trading Academy, it is completely fake. It is a scam. Block them, report them. Do not respond, and please do not give these people your money. So I just want to put that out there. Let's go ahead and hop right into the video. If you are new here, smash that like button, make sure that you subscribe, turn on the notification bell so you don't miss our next upload, and let's get started.
Yeah, I know I got problems and I don't know where to go.
All right, we're going to start out on the monthly time frame, and we're going to look at the overall structure. We're going to do a multi-time frame analysis, and then we're going to work our way down and try to determine where NZDUSD is going. Now, you always want to be economically aware of what's going on in regards to the currencies that you're trading. So I recommend that before you trade, before you place a trade, you look at an economic calendar and you see what news is ahead for that particular currency or pair, and then you kind of know what you're dealing with fundamentally. You don't want to be caught off guard if you're trading, for example, minor levels, or you're scalping. You should be trading major levels anyway, but you just don't want to be caught off guard. And you always want to know where you're going to cut a loss, where you're going to add on to your position, all those type of things. So the more you prepare in advance, that will help to increase your probability of coming out of that trade profitable. So let's start out on the monthly time frame, looking at the structure of NZDUSD. So what we have here is a bear structure currently. You can see that we have a market that is giving us lower highs and also lower lows. Presently, we have a monthly high right here at this zone, and that price point is about 63.70 or so. Notice that we have a double wick rejection off of this zone and how price is continuing to push down. So one thing that we see that's evident on this higher time frame, which gives us the bigger picture of what price action is doing, is that we're likely headed to the downside. We have multiple confirmations of that, and we can also see that this is an area where the price has bounced or moved from multiple times. It's been resistance, it's been support, it's wicked all through this area. And you can see before this, we had a monthly high right here. So we moved a little bit lower, and now notice that this is an area of very strong support as well, where the market has rejected a few times. And notice how the market is approaching that area again. So this is going to be significant to us on the lower time frame, and I'm going to show you why. So now that we know this, we're going to keep drilling down. So we always want to start a little bit higher up just so that we can get an overall feel for what the market is doing, and then we can continue building our case as we move lower. So now we're going to go to the weekly time frame, and now you can see on this weekly that we have been pretty much in a bearish trend previously. So let's just kind of look out. So previously we've been in a bearish trend. You can see that the market slightly broke above our high in this uptrend, but rejected off of it. So we didn't really get a valid new high. So we still are quite bearish. And then you can see how we dipped a little bit, price came back, rejected to the downside. We had sort of a double top here. Now here's the neckline of this double top on the weekly time frame. And now we can see quite clearly that price has pushed below the neckline and it's continuing to push lower. So bearish sentiment is clearly very strong. And this is a turning point right now where we could see the market kind of rebound and make a correction. Possibility, okay? So now I'm going to show you what to look for. So now let's keep drilling lower and let's go to the daily time frame. So now on the daily time frame, we can see quite clear that we are transitioning. So you can see how it sort of looks sideways on the daily. So see how we're just kind of sort of sideways, right? And now we may be finally getting some directional movement. So here is our swings from the top, and I'm going to show you what I saw on this daily time frame. So look how the market pushed up. It rejected from a previous swing high from back in April. So this was a supply zone for us on the daily time frame. We also had a bearish engulfing candle. The price continued to sell off. We then got a correction and price gave us a flag pattern. So here is our flag, okay? This is our bearish flag. And then we had a sell-off from this flag pattern. So we pretty much have a downtrend where we have at least two highs. So let's just connect that. We have two swing highs here. And then also too, another thing that I like to use for trend trading is the 50-period moving average. So you can see clearly that price crossed below our 50-period moving average. And we just have a lot of signals that price is deeply bearish and that it was going to continue lower. So now look where the market is approaching. Anytime you have an impulse wave or a forceful movement in price, for example, we can take our Fibonacci retracement tool, and after this sell-off for 2 days, we would have wanted, you want to wait for price to pause and look where the price actually stopped and turned around. So look where it stopped here, and notice that back in March, that price rejected off of this area multiple times and pushed to the upside a nice amount of pips. So you want to look for areas like that where you're expecting the market to turn. Now you can see what the market did. But if we take our Fibonacci retracement tool, measure from the high of the impulse to the low, you will see that price rejected right off the 618 Fibonacci retracement area and continued lower. So now we want to do that same thing, and we want to see if price is going to start to pause right where we are looking at right now, which is a demand zone. So this is our demand zone right here. And you can see that price is even starting to wick off of the area. And what we want to do, we have evidence on the higher time frame that price will likely continue lower. So in this case, we want to take our Fibonacci retracement tool, measure from the high to the low of the impulse. Okay, I'm just going to bring it down just a little bit to about the wick area of the last wick here in this zone. And we want to see that we will get at least, now we typically tend to see price retrace to at least a 38% fib. It's not guaranteed, but the sweet spot is the 50% or 618 fib level. So notice how the 618 to 50% fib actually aligns with an area right here. So this was the area that was broken. So this was previous support right here on our daily time frame. And when I remove this fib retracement tool, you will notice that if we get a retracement back into this zone, that will be the previous structure that was broken. So this support level was broken, and now we expect for this previous support to turn resistance and for that trend to continue downward. So right now, if you go long from NZDUSD, you have to know that it is going to be risky because you are trading against the overall dominant trend on the daily. However, from a higher time frame perspective, we also see that the market is shifting to the downside as well, or moving to the downside. So any longs are going to be risky. So you can either go long from this demand level, work out your risk management to what you're comfortable with. We recommend not to risk no more than 2% of your entire account when you're trading. And then you want to look for an opportunity to short. And where are we going to short? Always best to short from an area of resistance, not support. And when you are shorting, you want to really ask yourself, where are you getting a good deal? It's all about price and where you're getting a good deal. So one of the things that I like to look at, for example, on this daily time frame, is I definitely want to wait for the price to pull back to a previous area of support or resistance. And you can see within this area, we definitely had that. So we had an area of support. Look how much the market moved to the upside. We also had an area of resistance, also a cluster of support there. So I would set an alert right about, we want to set an alert right before price gets to the level. So I will set an alert right at about 61.80. And that way, once the price gets to this level, you then will look for a potential opportunity to short. Now, fundamentals might change this. And one of the things we need to be aware of is the US debt ceiling decision that's to come soon. So just to protect your capital, because you always want to do that, make sure that you have a hard stop loss, or you know where you're going to cut your losses if anything happens. Always have an emergency stop, because this debt ceiling decision, you don't want anything to happen and you wake up in the middle of the night and your account is hundreds of pips in drawdown and you didn't have a stop loss. So just make sure that you protect your capital. So guys, you want to look for an opportunity from this demand zone. So this is your demand buy zone. And we're looking for price to correct upward, at least to about the 38 to 50% fib level, okay? Then we'll be looking for an opportunity to short. So this will be your resistance area that you will want to let the price come back to. And you simply wait and you be patient. If price doesn't get to where you are interested in selling or buying, then you don't enter the trade. And remember, you always want to execute according to your rules. Also know that this is a very obvious level, and a lot of times there are a lot of stop losses below this level. So know that if the price does dip a little bit lower, I don't like to set my stops near structural levels. I instead like to execute more positions. So it's up to you how you want to manage this, but this is what I'm expecting on NZDUSD at the moment. Make sure you're following us on TradingView, because that is likely where we will provide an update. And we also will guide our students if we drop a trade idea. But comment below, let me know if you agree with this analysis, what you most look forward to. Are you going to wait for the short opportunity? Are you going to go long right now? And if so, where are you going to take your target? I'm curious to know. Let me know down below. And if you are a new or struggling trader, check out the description of this video. Make sure you're aware of all of the resources that we have to offer. Otherwise, thank you guys for watching. I hope you found value in this training, and I will see you in the next video. Let me know also what other pairs you'd like to see. I'll see you soon.
Yeah, I know I got problems, and I don't know where to go. I don't wanna put the blame on you.